Hi, and welcome to the X22 Report Spotlight. Today we have a returning guest, Peter Schiff. Peter is the chairman of Schiff Gold, CEO and chief global strategist of Euro-Pacific Capital. Peter is one of the few forecasters who accurately predicted the 2007 housing market collapse and subsequent 2008 financial crisis. And I am very happy to have him back on the X22 Report Spotlight. Peter, welcome back to the Spotlight.
Oh, thanks for having me back on the Spotlight.
Hey, thanks for being here. Last time you were on, this was back in February, and we discussed the economy, and I wanted to get your take on how the economy is doing right now since February to this point. Has the economy gotten better? Has it gotten worse? Where do you see the economy headed right now?
Well, I think we're headed for a disaster. I mean, I don't think it got better during the recovery. I think basically the Federal Reserve shot the economy full of monetary heroin. And as a result of that, we took on more debt. We spent more money. We dug ourselves into a deeper hole. Instead of solving the problems that caused the 2008 financial crisis, we just found a way to paper over the problems and actually make them worse. And now I think we're headed for an even bigger economic calamity than the one we had in 2008.
Now, many people are looking at the stock market, and, there are some people saying that the stock market's going to continually move up and up and up. And people are looking at this as a gauge of how the economy is doing. When you look at the market, what do you see happening? Is this an actual gauge of how the economy is doing?
No, not at all. There is a complete disconnect between the economy and the stock market. I mean, if the economy were the stock market, Hillary Clinton would be the president, because the stock market did very, very well under Barack Obama. But the public, did not vote, for Hillary because of the fact that the economy was bad and people wanted change. I think that the strength of the stock market is actually a byproduct of the very policy that is helping to undermine the real economy. One of the reasons the economy is so weak is because the stock market is strong, because what's causing the market to be strong is the cheap money policies from the Fed. So it's artificially low interest rates and quantitative easing that fueled the stock market bubble. But those are the same policies that undermined real economic growth. It really was a transfer of wealth from Main Street to Wall Street. Instead of having savings and productive capital investment, we had debt and rampant speculation. So none of this is good for the economy, but it can make some people wealthier on paper if you happen to own the financial assets. And I think it's a mistake for Donald Trump to constantly tout the record highs in the stock market as some kind of validation of his policies and to claim credit for the stock market going up, because we know the stock market at some point is going to come down. And, you live by the market, you die by the market. And I think Trump should be distancing himself from this market. I liked him better as a candidate. He said it was a bubble. He was right then. It was a bubble and it will pop.
Why do you think he's out there saying, hey, look at the stock market, look how great it's doing? Why do you think he changed?
Well, because he can't resist. I think he's getting some very bad advice, but, he wants to claim credit for it. He's, a marketer. He's a salesman. And so he's working with what he's got. So, when he was a candidate, he was talking about the bubble. But now that it's his bubble, he wants to redefine it as a bull market, and he wants to claim credit for it. Just like he is bragging about the low unemployment rate. Well, when he was a candidate, he said the low unemployment rate was nonsense, that it was meaningless. It was phony statistics. He talked about how high the real unemployment rate is. Well, none of that has changed. It's all exactly the same. But now he's spinning it in a different way. Now he's like, well, it's my economy, so now I want to talk about how great it is. But I think that's wrong. I think he should stick with the idea that the economy is not great, and it's not his fault that it's not great. He wants to try to fix it. but he's claiming that it's already fixed. So it's now going to look like he broke it.
There's a lot of talk about Obamacare repealing it. Why is it so important for him to repeal Obamacare? I know he made these promises during the campaign, but what is his end goal here? Why does he want to repeal it so badly?
Well, I mean, it was very bad legislation. It's very harmful to the economy. It is going to be responsible for driving up healthcare and insurance costs. So it's going to basically achieve the opposite of its stated objective. But the problem is most of the repeal and replacement bills that the Republicans brought forward were almost as bad and in some cases worse. I mean, they wanted to talk about repealing Obamacare, but they actually didn't want to repeal it. They wanted to repeal it and preserve it at the same time because they don't have the political guts to tell the voters the truth about what health insurance is and that there's no free lunch. So, I mean, basically, Trump wanted to have his cake and eat it, too. He wanted to repeal Obamacare, but preserve it at the same time. He wanted to tell people that they didn't have to buy expensive insurance if they didn't want to, but that if they were sick, they can buy insurance for the same price as they could buy it when they were healthy, which, of course, is great for the consumer because it means that there's no reason to buy insurance. I mean, why would any healthy person buy health insurance if they could just wait until they get sick? And then if they need it, buy it for the same price as if they had bought it when they were healthy. I mean, that's, that basically destroys the reason to buy insurance in the first place. So it's great for the consumer, but ultimately it's lousy for the consumer because it destroys the insurance industry. And if the insurance industry can't make a profit, then there's no insurance. But I mean, what the Republicans wanted to do was substitute premiums paid by healthy people for subsidies paid by taxpayers. They wanted the taxpayers to provide the money to pay out the claims to the sick people because the healthy people weren't going to buy any policies thanks to the ban against pre-existing conditions. So the whole thing was a farce. And in fact, if you go back to the end of last year, early this year, I was one of the only people out there saying that they were not going to repeal Obamacare. I said, I think it's going to stay. I don't think they'll be able to repeal it. And I was right because I understood what Obamacare was. And I saw the inconsistency in what the Republicans were claiming because they wanted to preserve the ban against discriminating based on pre-existing conditions. Well, the minute they staked out that position, they were doomed because you can't repeal Obamacare without repealing that.
But as we can see, Obamacare, and this has been happening a long time, way before Trump, where a lot of the exchanges, they're going completely bankrupt, losing billions of dollars. And we see that people, because the premiums are going up so much that they're just not taking it. They'd rather take the penalty. So don't you think Obamacare is going to eventually implode on itself?
Well, of course, it's going to collapse. I mean, that's the other reason that I think it was foolish for the Republicans to try to repeal it in the half-assed way that they were, because what they were really doing was just rebranding Obamacare as Trump Care or with a Republican label on it. And so when it collapsed, it would have been their fault. So I do think that John McCain actually, did them a favor because I think that leaving Obamacare as is and then letting it collapse is better than replacing it with something that also collapses. Because then the Democrats would be able to say, well, everything was fine until the Republicans came and screwed it up. So I think we gotta go down with this ship if we have any hope of making some real reform.
I wanted to move on to the Fed and them raising rates right now and unwinding their balance sheet. And like you said previously, the economy is not doing that well. Nothing's really changed. Why has the Fed at this point decided, let's raise rates, let's unwind our balance sheet if they actually ever do it? Why did they decide to do this in an economy that's so weak?
Yeah, and of course, you're right. They haven't actually done anything about shrinking their balance sheet. In fact, the balance sheet is still expanding. They're still reinvesting the interest in principal. So they haven't even, stopped growing the balance sheet, but they're still talking about shrinking it. But I think, one of the reasons that they've stepped up the pace, or maybe the only reason that they've stepped up the pace of rate hikes, because remember, before the election, before Trump was elected, the Fed raised rates one time while Obama was president prior to the election. Since the election, the Fed has raised rates 3 times. And so the question is, why are they raising rates so much faster now under Trump than they were under Obama, when the economy is certainly no stronger today than it was then? And in fact, by most objective measures, the economy is weaker now, not because of anything Trump has done, but that was just a trajectory that we were on before Trump took office. The economy was weakening, the stimulus high was wearing off, and the hangover was going to set in. So the question is, why was the Fed so timid and so data dependent? And they just used the weak data as an excuse not to raise rates. And, why have they been raising? And, there's really only two possibilities. One is because the stock market is so strong. And you can say that, they really were market dependent, not data dependent. And so it's the stock market that is giving the Fed the confidence to raise rates. And the other explanation is that it's Trump. When Obama was president, the Fed wanted to help the economy, wanted to keep it propped up to make Obama look better. And they wanted to make it easier for Hillary Clinton to get elected. So they didn't want to be too aggressive with the rate hikes, knowing that that could tip the economy into recession. But once Hillary lost and Donald Trump won, I don't think Donald Trump has a lot of friends at the Fed. Certainly, he doesn't have a friend in Janet Yellen, and he's made it clear that he's probably not going to reappoint her. So at this point, they may feel, well, Trump is the perfect fall guy. We can raise rates, and if the economy falls apart and the market falls apart, people aren't going to blame us. They're going to blame Trump. So it could be politics or it could be the market. There's no way to know for sure. And it could be a combination of both.
When you were predicting the credit crisis and the housing market falling apart back in 2005, 2006, 2007, they were raising rates back then during that period. And then all of a sudden they stopped and they started bringing them down. Do you see similarities right now that they're doing the same exact thing where
the first similarity is that they slashed rates in the first place? The problem for the housing market was not that they raised rates. The problem was that they lowered them in the first place. And if anything, they raised rates too slowly. While they were slowly raising rates, more and more, mortgages were taken out with teaser rates. The more and more subprime mortgages were originated. So had the Fed raised rates quicker, they would have pricked the bubble quicker, and the bubble would have been smaller when it pricked. So, there wouldn't have been as much air to come out. So, yeah, the Fed has made the same mistakes this time around, only bigger. This time they left interest rates lower for longer, and this time they're normalizing them at a much slower pace. So they inflated a much bigger bubble when they were cutting rates and keeping them down, and they've allowed it to expand because of an even slower pace of increase. But ultimately, we're heading for the same type of disaster, except the one that's coming is going to be much larger than the one we had in '08.
Now, why do you say it's going to be much larger? What are you looking at to say that, things are going to be a lot worse than they were back in '08?
Well, the bust is proportionate to the boom, or not necessarily to the size of the boom, but to the amount of artificial stimulus required to create it. So an analysis would be just a drug use. If you use a lot of drugs and then, you go through withdrawal, right? Then, you have a certain, your hangover, or maybe just alcohol. Maybe that's easier for most people to relate to. If you get a little bit drunk, maybe you're a little bit hungover. But if you get completely plastered, then you're thrown up in the toilet bowl and you have the dry heaves and, you're really, so, the more alcohol you drink to get drunk, the worse it is when you have the hangover. So, you look at what we did in 2000, what we did to inflate the housing bubble. We had interest rates at 1% for about a year. And then over the course of 2 years, we raised them back up to 5%. And that was enough to do the housing bubble, right? Or a year and a half at 1%, and then, a couple of years to raise them. Here we had 0% for 8 years. We had 3 rounds of quantitative easing. And then we finally started to raise rates, but we only have them back at 1% right now. We've only managed to raise them to the level that we slashed them to in, 2002. So this is much more, stimulus. A much bigger dose of this, monetary heroin than we had last time. And so the distortions, it's the artificially low interest rates that distort the economy. And when rates go up, the market tries to repair the damage that was done, all the malinvestments and misallocations of resources. And so the Fed has done far more damage. We have a lot more debt now than we had back then. We have, corporations have more debt. Households have more debt. Now, you have to take out mortgage debt, because if you count mortgage debt, you can't see the big increase in household debt. But that's because home ownership is at a 60-year low. So a lot of people don't have houses anymore. So obviously they don't have mortgages, but they still have to pay rent, and rents have been going up. But meanwhile, we have record credit card debt, record student loans, and record auto debt. So the public is loaded up with debt. The government, the federal government, has a $20 trillion debt. That's an all-time record. Also, individual states are loaded up with debt. So every aspect of our economy is loaded up with much more debt than we had in 2008. And all the banks that failed because they had too much debt have even more debt now, right? All those too big to fail banks are much bigger today because we bailed them out, and they have much more debt, and they're much more vulnerable to increasing rates than they were back then. So, all the problems that created that crisis are many times worse. So we're talking about an economic event that is, larger by an order of magnitude than the '08 crisis. And, that one gave us the worst recession since the Great Depression. This one will probably give us the worst recession, including the Great Depression, which means, I guess we'll have to call it the Greater Depression. If it's going to be worse than the Great Depression, we probably can't call it a recession.
Peter, I'm going to ask you this question because a lot of people, they continually say this. We've been through this economy for 8 years now, and people say, well, yeah, you talk about how things are getting worse, and nothing has happened yet. What do you say to these people that are looking at the economy, who are feeling like everything is fine, there's euphoria in the market, and we, you, myself, and others are continually telling everyone that there's problems in the economy, but nothing has happened yet? What do you say to those people?
Not true. I mean, Donald Trump is president. I mean, how did he get to become president? Because everything is great? Because, people are satisfied? I mean, Donald Trump won a lot of blue collar voters, a lot of Democrats who had been voting for Clinton, for Obama, voted for Trump. Why were so many blue collar workers, if things are so great, why did they cross party lines? Why did they vote for Trump? I mean, I would say that his election is pretty good proof that things are not doing as well as people believe. Also, look at retail. Retail sales are collapsing. This is the worst year for store closures and bankruptcies, including 2008, 2009. And this is not just because of Amazon. I mean, Amazon's been around for almost 20 years. Why all of a sudden are all these stores just, closing down? People are broke, and, you look at the number of people on food stamps, on disability. I mean, these are still near record highs. I mean, we're not that far below the peaks from the depths of the Great Recession. So why didn't all these people, get off of welfare, get off of food stamps? Why are they still on the dole? Look at the labor force participation rate. It collapsed. I mean, why are so few people actually in the workforce? If we've had this great economy, why haven't we created good jobs that would entice people back into the workforce? They're not. I mean, and why are so many people working part-time jobs, not instead of full-time jobs? Why do so many people have 2 and 3 jobs? Why are a record number of people in their 70s and 80s still working? Why can't they retire? Why are they forced to work? So all this is a sign that the economy is weakening, not strengthening.
Is there any way to reverse this? Can Trump, he made a lot of promises during his presidency when he was campaigning, and then after he was inaugurated, where he says, oh, this manufacturer is bringing jobs back, that jobs, those are coming back. He continually did this. I mean, it was great press, but is there a way that he can possibly reverse all of what has been done?
Yeah, there is a way, but politically it's a very treacherous road that nobody wants to go down. I mean, it's nothing that the government can do. It's simply what the government can undo. The government is responsible for the sluggish economy. But in order for the economy to get better, it's going to have to get worse first. I mean, that's just like, get back to the analysis of, somebody who's a drug addict. You want to get off of drugs and you want to, have a more productive life. You're going to go through rehab. I mean, things are going to get worse before they get better. I mean, that's the case, for a lot of people. I mean, even if you're an individual, if you've been spending too much and you're broke, what do you have to do? You gotta cut up the credit cards. You gotta ratchet down your lifestyle. You gotta start saving more. You gotta work harder. So things are going to have to get darker before they get brighter. And therein lies the political problem, because nobody wants to advocate that. Nobody wants to level with the public about the fact that it's going to have to get worse before it gets better. They want to promise immediate relief. It's almost, like, somebody's selling, a weight loss system. I mean, you can sell a lot more if you just promise, hey, rub this cream on your thighs and the fat's going to go away, right? You don't have to exercise. You don't have to diet. That's what the public wants, a gimmick, a quick fix, right? What Trump has to say is, no, that's not going to work. There is no quick fix. We have to go on a diet. We have to exercise. But if we do this stuff, then we're going to have, a good result down the line. But yes, no pain, no gain. Well, that applies to the economy. No pain, no economic gain. But again, nobody wants to be the bearer of bad news. Nobody wants to acknowledge the pain. So that here we are, right? We just continue to rub, cream on our thighs and expect the fat to go away, but it doesn't. And if we keep eating and we don't exercise, we just get fatter and fatter.
You mentioned the banking system before. The Fed, did their stress tests, and they're saying that the 34 banks, they passed the stress test. The banks are strong, but we see what's happening in Europe. Banco Popular and many other banks, they're in trouble. We see bailouts or bail-ins, whatever they want to call them. How strong are the banks right now? Can they weather this storm?
Well, I don't think the banks are very strong. I mean, I'm very suspicious of the banks, because the banks have really, been propped up with low interest rates. And, a lot of people are optimistic that as rates go up, they think it's good for the banks because they think, the banks will get a better spread, right? They're going to earn more on their deposits. But I keep looking at the other side of it. What happens to the value of their financial assets when interest rates go up? What happens to the viability of the loans that were made when interest rates are low? What happens if a lot of the people who borrowed money can't afford to pay it back in a higher interest rate environment? What happens if the collateral that they pledged for their loans loses value in a higher interest rate environment? So what happens if the banks end up with massive losses? And of course, how are the governments going to bail these financial institutions out if they're also trying to tighten monetary policy at the same time? So there are a lot of problems. That's why I don't own any of these banks. I mean, I don't have any investments in the financials anywhere in the world. I've just been avoiding them. And, obviously they've done okay, and, and so I would have been okay if I'd have bought them. But yeah, the financials did okay in 2006, 2007, but then they got decimated.
I wanted to switch over to gold and silver, the precious metals market. And, we've been seeing gold and silver. They really haven't moved for many years. To me, it seems like they're keeping them at this one level. Even though the dollar is declining or moving up, it doesn't make a difference. It doesn't really matter what the economy or the stock market. It seems like gold and silver, they really don't move anywhere. What is your take on what is happening in the precious metals market?
Well, remember, we had a very, very big run in the metals market that began really in 2001 when the Fed started cutting rates, initially under Greenspan after the dot-com bubble burst. And so then we had gold move from, under 300 to 1,000. Then it pulled back in 2008 to about 700. Then it went from 2008 to 2011 up to around 1,900. So you had a move from 300 to 1,900, really a six-fold increase in the price of gold. Very, very big run in about a decade. Then we had a 3-year decline in the price of gold. And we bottomed out in December of 2015 when the Fed raised rates for the first time. We bottomed out at 1,050. Here we are, a year and a half later, we're at 1,270. So gold is now starting to recover. It hasn't quite broken out yet, but I think it's built a nice base. It's built a good consolidation. I think the lows are in. I don't think we're going to go back down to 1050. And I think once we break above maybe 1350, 1400, we're off to the races and we're going to go take out the high. So, gold has made a big move, and I think it's consolidating, getting ready to make an even bigger move. But, people, lose patience. They expect immediate results, and markets don't generally work that way. They generally try your patience and shake out the weaker players. And I think that's the same case here. I think people are underestimating just how high gold is going to go. because they don't have the immediate gratification of the instant, reward. But meanwhile, I've just been accumulating. I've been advising my clients to keep accumulating over time. And I think we're going to be rewarded.
Now, you mentioned previously that, this is going to be worse than '08. Should people own gold and silver? Will this help them? Will it not help them? Why is it so important to have precious metals?
Oh, absolutely will help. Obviously, look, it helped a lot to own them, from 2001 through 2011. You did much better than just owning the stock market. So it adds a level of diversification. I look at it as liquidity, as a store of wealth. I'd rather own gold bullion than own cash. But I don't tell people to own gold at the exclusion of real investments like stocks or bonds. I still buy those things. I've just been buying stocks and bonds outside the United States. I've been buying in countries where I think the valuations are much better and they don't have, this economic disaster looming in the horizon. So I'm trying to work gold into a portfolio and have it as a part of an overall diversified portfolio. Sometimes people think I just advocate gold. I don't. Most of what I tell people to do for their investments is actually in publicly traded stocks. We collect a lot of dividends on the stocks that we buy. So people have to keep their gold in perspective and understand what its role is in your portfolio. But, the typical asset manager or investment advisor doesn't recommend that their clients own any gold. And I think that's a mistake.
Now, you mentioned that we're going to be heading to this period of time where it's going to be a lot worse than '08. When you look at what is coming, what do you see happening? Like, what parts of the economy are going to be a lot worse than '08? Like, what can people expect to see or happen, maybe to their pensions, to their savings, to jobs? What do you see happening?
Well, one of the benefits of '08 was that the dollar, which had been very weak going into that crisis, strengthened. And as a result of that, prices went down. Remember, oil prices collapsed from $150 a barrel to $30 a barrel. And so, that was like a tax cut. And, prices for a lot of things went down. And so that alleviated the problems for a lot of consumers. Maybe they lost their job, but at least their cost of living went down a bit. So there was some relief there that was supplied by the strong dollar. I think this next crisis is going to be centered on the dollar. I think it's actually going to be a dollar crisis, not just a financial crisis, but a dollar crisis. I don't think it's just going to be mortgages that are in trouble. I think it's going to be treasuries that are going to be in trouble. And so also, from the 2008 financial crisis, there were these bailouts. And even though the bailouts did structural damage and prevented a real recovery, in the short run, they eased the pain. It was like, having Novocaine when you have, something, you break you have a broken ankle. So you shoot it up with something so you don't feel it. But then the problem is if you keep walking on it, you make it worse, which is what we did. But I don't think we're going to be able to do that. I don't think we're going to have the big bailouts next time because I think it's going to be impossible because it's going to be the U.S. government that needs the bailout. And it's not going to be able to bail out anybody when it's what's in trouble. So I think the weak dollar is going to cause big increases in consumer prices. And so that is going to be a much more painful situation for average Americans because not only are they going to lose their jobs in the next recession, but everything they need to buy is going to be a lot more expensive. So, it's going to be infinitely worse. And of course, I think Donald Trump, unfortunately, is going to be the fall guy here. I think he's going to take the blame for this.
You think pensions are going to be in trouble?
Well, they are in trouble. Pensions have been underfunded for a long time. And, depending on what happens to the stock market and the bond market, the degree to which they're underfunded could skyrocket. And of course, the government guarantees these pensions. So that's just another liability that the government gets hit with that it really can't meet.
Peter, thank you very much for being on the X22 Report Spotlight. I really appreciate it. Once again, how can people see your work?
Well, I'm all over the internet. If people just want to listen to my comments on a regular basis, my podcast is on schiffradio.com, and you can, down it iTunes or Stitcher or, all these different places. You can also look on my YouTube channel, Peter Schiff, Schiff Report. We post my podcast there, video blogs. I have free stuff that I put out. I have a weekly digest. You can sign up for that. at my website, europac.com, EUROPAC.com. And of course, if you want to be a client of mine, if you want to have a brokerage account, if you want me to manage your money for you, either as a separately managed account or through my mutual funds, talk to one of my brokers at Euro Pacific Capital at europac.com. You want to buy some precious metals? I have a gold company, schiffgold.com. We've got some of the best prices online, but we actually have live people that you can talk to. It's not just automated, but we compete with the online guys on price. And also, everybody should go immediately after listening to this and open up an account at goldmoney.com. That is a great way for everybody to own some gold, because Gold Money combines gold ownership with a payment platform so that you can actually use your gold as liquidity, just like a bank account or a checking account or maybe a cryptocurrency, except its value is real. It's based on the amount of gold that you actually own, but you have access to that gold as if it was a digital wallet full of gold. You can spend the gold. You can earn gold. I mean, if you have a business, you can invoice your customers who can pay you in gold. And, you can pay instantly for free across the world. I could buy a pack of chewing gum and pay for it in gold. I can buy a car and pay for it in gold, right? I can buy small things, large things. I don't have to, chisel off a small piece of gold from my bar, right? It's, the company stores it, but they can, debit however amount of gold I need. So if I've got $5,000 worth of gold in my digital wallet and I want to buy something for $50, they'll just send the person selling it to me $50 worth of gold. And if the person selling it doesn't want gold, I can convert my gold into dollars, into Swiss francs, into British pounds, into euros, whatever currency they need. And I can send that instantly as well. Or I can use it. They'll give you a free debit card, MasterCard, and you can just use that card. And you can spend your gold, with anybody that accepts the MasterCard or Visa. So I think it's great. It's better than having a PayPal account because your money is in dollars. It's basically a way to save in gold, earn in gold, spend in gold. You put yourself on a gold standard. So, and it's the cheapest way to buy it. It's only 0.5% over spot to buy and sell it. So it's a great way to do it. So everybody should have some money at Gold Money. So it's goldmoney.com is how to set up that account.
Peter, once again, thank you very much for being on the spotlight. I appreciate it.
Yeah, my pleasure.
Thank you.